Welcome back, everyone. Today's deep dive is all about Britannia Industries. You guys sent over their latest quarterly results, and we're ready to dig in. We got the press release, the full financials, even the presentation from their analyst call, plus some questions you had.
Wow. Yeah, that's quite a stack of information.
So let's see if we can break it down and find the most interesting bits.
Sounds good.
All right. The analyst presentation starts off with some big picture stuff about the Indian economy. High inflation seems to be hitting a lot of everyday essentials pretty hard.
Yeah.
Cereals, pulses, even vegetables, just to name a few. What's the overall picture for consumers right now?
Well, the presentation highlights this interesting point that while demand overall has been a bit, I guess you could say, tepid, rural areas are actually showing stronger growth than urban centers.
Oh, really? That's kind of surprising.
Yeah, it is interesting.
I would figured urban areas would be a little more resilient to that, with higher incomes and all.
Well, not necessarily. The presentation points out that housing costs are hitting urban consumers especially hard. Rents and property prices have been soaring.
Yeah.
So that's really eating into their disposable income. And a lot of the urban workforce, especially folks in non-salaried roles, haven't really seen their wages keep up with inflation.
So it's a double whammy. Higher expenses and their wages aren't keeping up.
Exactly.
So that explains the whole urban versus rural growth thing. So how is Britannia itself doing in the middle of all this?
Yeah, so for Q2 of FY25, their revenue came in at 4,566 crore rupees, which is a pretty decent year-over-year increase, 4.5%.
Okay.
Even stronger quarter-over-quarter, it's up 10.6%.
So growth's good, at least on the surface.
Right.
But I'm guessing the profitability picture isn't quite as rosy.
Well, it is a mixed bag. You're right. Profit after tax is down 9.6% year-over-year, though it did rebound 5.1% compared to the previous quarter.
Oh, okay.
Operating profit shows a similar trend, down year-over-year, but up a bit quarter-over-quarter.
So they're growing, but there's definitely some pressure on their bottom line.
Yeah.
What are they saying about all of this?
Well, they seem to be acknowledging the tough environment, but they are highlighting their ability to, still grow. That top line,
Yeah.
There's definitely an emphasis on managing costs and maybe tweaking their pricing strategies.
Okay. We'll come back to that whole cost management thing later.
Yeah.
But first, you mentioned biscuits. Just how dominant are they in that market?
Oh, they are really dominant. The presentation has a chart that shows it. It's pretty amazing. Their market share in biscuits is miles ahead of the competition.
Really?
Yeah. It's been that way for years across all different price points too.
So what's their secret sauce? How do they maintain that kind of edge?
Well, they give a few key factors. One, their distribution network is incredibly wide. You can find their products basically everywhere.
Wow.
They've also been really consistent with brand investments, keeping their products top of mind. And crucially, they stay price competitive, which is super important in a market that's really sensitive to inflation.
Yeah, that makes sense. They're not just sitting on their biscuit throne, though, are they?
No, not at all.
The presentation actually mentions 6 strategic pillars that they're focusing on. Distribution and marketing, which we kind of already touched on, plus lead innovation, adjacent businesses, cost efficiency, sustainability, and then just, profitable growth overall. Anything in there really jump out at you?
I think they all play a part, but the adjacent businesses thing is particularly interesting.
Oh, really? Tell me more about that.
Yeah, they're branching out beyond just biscuits into categories like cakes and rusk and wafers, even cheese and drinks.
Oh, wow. Okay, so diversification makes sense. But is this just dipping their toes in, or are they going all in? Did they highlight any specifics about these new ventures?
Yeah, they did actually. They've launched some interesting products. There's the Milk Beakies wafer roll, which seems like a pretty clever way to, leverage an existing brand.
Yeah.
And they've also got a new layer cake with jam and cream.
Oh, okay.
And there's also this Tiger Coconut Golmaal butter, which I think plays on their Golmaal franchise, but with a new twist.
I'm intrigued already by that butter. So it sounds like they're pretty serious about these adjacent businesses.
Yeah.
Let's go back to that cost pressure we talked about earlier. How are those rising commodity prices actually hitting them?
Well, there's a pretty stark chart, actually, that shows how much those key ingredient costs have gone up, year over year. Cocoa, flour, sugar, palm oil, all of them are significantly higher. And that puts direct pressure on their margins.
Yeah. So how are they fighting back against this commodity price squeeze?
Well, they outline a kind of multi-pronged approach in their presentation. They're emphasizing cost leadership initiatives throughout their operations, everything from sourcing to production.
Makes sense.
They're also getting creative with packaging reengineering to use less material.
Oh, smart. Anything else?
They're also implementing what they call targeted pricing actions, which I think means adjusting prices for specific products or maybe in certain channels to kind of offset inflation, but without shocking consumers.
Right, being strategic instead of just raising prices across the board.
Right.
Now, what about sustainability? How are they handling that whole growing focus on, ethical business practices, both from investors and consumers?
Yeah, it seems like they're making a genuine effort there. They highlight their commitment to environmental, social, and governance factors, the whole ESG thing, and their progress in a few different areas.
Okay, like what kind of specific things are they doing?
Well, for one, they just published their fourth sustainability report.
Oh,
So that shows some transparency.
yeah.
And they also completed their first assessment based on that task force on climate-related financial disclosures framework, the TCFD one.
So they're not just talking the talk. They're actually putting in the work to measure and manage their impact.
Yeah.
Anything noteworthy internally?
Yeah. They launched a software platform to digitize their sustainability data collection, which I think lets them track their footprint more effectively.
Makes sense.
And they've also started an e-learning module to boost sustainability awareness among all their employees.
Oh, I like that. Getting the whole team on board. Okay, before we get into the nitty-gritty of their financial performance, let's talk about this press release about the new board appointments. That appointment of Mr. Jahangir Nusli-Wadia as an additional non-executive, non-independent director kind of caught my eye.
Yeah, that appointment does raise some interesting corporate governance questions.
Really, what's the issue there?
Well, the appointment is still, subject to shareholder approval, which is standard.
Right.
But it's worth noting that Mr. Jahangir Nusli-Wadia is the son of the current chairman, Mr. Nizli N. Wadia.
Oh.
And to add another layer, he's also the brother of another board director, Mr. Nes N. Wadia.
Ah, so those family ties could lead to some concerns about potential conflicts of interest.
Exactly.
Definitely something to watch. Now, shifting gears a little bit, the financial statements mentioned an exceptional item related to expenses for a voluntary retirement scheme, or VRS, at one of their factories.
Yeah, that stood out to me as well. It's easy to get caught up in the numbers, but this is a good reminder that behind those numbers are real people whose lives are actually affected by, these business decisions.
Yeah, that's a good point.
This VRS scheme really highlights that complex balancing act companies face between, being operationally efficient and also the well-being of their workforce.
Yeah, it's a tough balance.
Yeah.
All right. Are you ready to crack open these financial statements and see what stories they tell?
Let's do it. I'm especially curious about those revenue trends and how they've managed costs in this whole tricky environment.
Okay, so let's start with those revenue trends. They have a chart in here that shows quarterly revenue growth over the past few years. And it paints an interesting picture.
Okay. What jumps out at you?
Well, I mean, the overall trajectory is upward, which is good.
Yeah.
But there is some fluctuation in the growth rate. You see some quarters where it's really strong, like double-digit increases, and then other quarters where things dip, even a few negative quarters in there.
Oh, wow. So it's not just like a straight climb to the top. What do you think is behind that kind of unevenness?
Well, I think it reflects those dynamic market forces we talked about earlier.
Okay.
Like, consumer sentiment, inflation, even seasonal factors can impact spending patterns and ultimately revenue growth.
Right. It makes sense that all those external forces would play a role. I also noticed their operating profit margins have been a bit up and down. What factors might be driving that variability? I think that really speaks to that balancing act that companies often face between growth and profitability.
Right.
Like sometimes you might prioritize really aggressive expansion, even if it means sacrificing some margin in the short term. Think, heavy investment in marketing, expanding your distribution network, maybe even some strategic price cuts to gain market share.
Yeah.
Other times, the focus might shift to really optimizing profitability, streamlining operations, and just, clamping down on costs.
So it's kind of like a constant dance between grabbing a bigger slice of the pie and making sure each slice is as profitable as possible.
Yeah, exactly.
Now, you mentioned before that Britannia is taking steps to mitigate the impact of those rising commodity costs. Does that show up in their financial performance at all?
Let's take a look at their cost of materials consumed, which basically reflects their direct expenses for all the ingredients and raw materials they use.
Hmm.
And as you might expect, this figure has been rising over the past few years, kind of mirroring those commodity price trends we talked about.
Okay, so the impact is definitely there. But are their cost management efforts actually, making dent in those rising expenses?
Well, it's hard to isolate the exact impact from just the financials. But if we look at their cost of materials consumed as a percentage of revenue, that gives us a sense of their relative efficiency.
Okay.
And what's interesting is that ratio has actually remained pretty stable, even with that surge in commodity prices.
So their overall material costs are going up, but they're managing to keep those costs in check relative to how much revenue they're generating,
Yeah.
which I guess suggests their efforts to, be more efficient and control costs,
Yeah,
or at least partially offsetting those inflationary pressures.
exactly. It's a testament to their focus on cost leadership and, operational excellence.
Yeah.
They're not just passively accepting these external challenges. They're actively adapting to maintain a healthy financial position.
Well, let's talk debt. How leveraged is Britannia, and how are they managing those debt levels?
So their financial statements give us a pretty clear view of their debt structure.
Oh,
We can look at their total borrowings, which includes both short-term and long-term debt, and compare that to their equity. This gives us their debt-to-equity ratio, which basically tells us how much debt they're using to finance their assets relative to the money invested by shareholders.
okay. So are they drowning in debt, or are they playing it safe?
Their debt-to-equity ratio has been pretty consistent over the past few years, actually. It's hovering around a moderate level.
Okay.
So that indicates they're not overly reliant on debt financing, which is generally a good sign. It suggests, a healthy balance sheet and prudent financial management.
That's reassuring. Now, no financial analysis would be complete without a peek at the cash flow statement. What insights can we gather from Britannia's cash flow?
Think of the cash flow statement as like a financial detective novel. It really reveals the flow of money in and out of the company. It shows us their ability to, generate cash from operations, invest in future growth, and meet their financial obligations. What stands out to you when you look at Britannia's cash flow?
Well, the cash flow from operations looks really strong. They consistently generate a good amount of cash from their core business activities,
Hmm.
which seems like a really fundamental indicator of financial stability, right?
Absolutely. That robust operating cash flow speaks to their operational efficiency, their ability to convert sales into actual cash.
Right.
And that gives them the flexibility to, reinvest, pursue strategic initiatives, and weather those economic storms we talked about.
Now, I see their cash flow from investing activities has kind of fluctuated quite a bit, even
Yeah.
dipping into negative territory sometimes.
Mm.
What do you think is behind those swings?
I think it's probably a reflection of their capital expenditure cycle. Companies like Britannia often make big investments in property, plant, and equipment. They might be expanding production capacity, upgrading facilities, or even, acquiring other businesses.
Right.
Those investments can be pretty chunky, hence the swings in cash flow from investing.
So sometimes they're spending big on long-term assets, and other times they're benefiting from those investments through increased production and sales.
Right.
Got it. Now, what about cash flow from financing activities? Any red flags or positive signals there?
Well, their financing activities are mostly about, debt management, dividend payments, and the occasional equity issuance or buyback. Interestingly, their cash flow from financing has been consistently negative over the past few years.
Hmm. Negative cash flow sounds a little alarming at first glance. Should we be worried?
Not necessarily. Negative cash flow from financing can actually be a good thing. It often means the company's using its cash to pay down debt, return value to shareholders through dividends, or even buy back its own stock, which can boost earnings per share.
So it's all about context. Okay, so we've looked at revenue trends, profitability, debt management, and cash flow. Anything else we should be considering in this financial puzzle?
Well, there's one more piece, working capital management. This is all about how efficiently they handle their short-term assets and liabilities, to ensure smooth operations and maintain that healthy cash flow we've been talking about.
Okay. Sounds important. How do we assess their working capital management?
We can use a couple key metrics.
Okay.
Their inventory turnover ratio tells us how quickly they're selling their inventory, and the receivables turnover ratio shows us how efficiently they're collecting payments from customers. Higher turnover ratios generally indicate better working capital management.
So faster inventory turnover and quicker collections are the goals. What do Britannia's ratios tell us?
Their inventory turnover ratio has been relatively stable, suggesting they're managing inventory well, avoiding excess stock that can tie up cash.
Good. What about the receivables turnover? Are they having any trouble collecting payments?
No, their receivables turnover has also stayed within a healthy range, meaning they're collecting from customers in a timely manner, which is, crucial for maintaining steady cash flow and minimizing the risk of bad debts.
So efficient inventory management and prompt collections, more evidence of their operational efficiency and sound financial practices?
Exactly. It all paints a picture of a, financially sound company that's strategically savvy and well-positioned to thrive in this challenging market.
Yeah.
But remember that comment in their presentation about commodity prices.
You mean the part where they said commodity costs are coming back?
Yeah.
That didn't sound too reassuring. What's the story there?
It seems like certain key commodity prices are on the rise again after a period of relative stability.
Hmm.
They called out significant quarter-over-quarter increases in cocoa, flour, and sugar, with cocoa seeing a particularly sharp jump.
Uh-oh. That doesn't sound good for their margins.
Yeah.
How concerned should we be about this resurgence in commodity costs?
I mean, it's definitely worth monitoring. However, Britannia has a proven track record of navigating commodity price fluctuations. They have some tools at their disposal, including, you know, cost optimization strategies, pricing adjustments, and even hedging mechanisms to mitigate the impact.
So while rising commodity prices are definitely a challenge, they're not necessarily a reason to panic.
Right.
It sounds like Britannia has the experience and the tools to adapt and manage.
Exactly. Plus, it's a global issue. Rising commodity prices are impacting businesses across industries, not just Britannia.
Right, right. Okay. We've really dissected Britannia's financial performance from every angle. Any final thoughts before we move on to your expert insights and tackle those listener questions?
All right, so we've covered a lot of ground with those financials. Now I'm curious to hear your expert take. What are your key takeaways from Britannia's performance, and how does their story fit into that, bigger picture of the Indian FMCG sector?
Yeah.
What I find really fascinating is how Britannia's journey sort of reflects these broader trends and challenges that a lot of FMCG companies are facing in India.
Hmm.
Like this inflationary environment, it's a real headwind. It impacts both input costs and consumer spending.
Yeah.
But even with all this pressure, we're seeing Britannia, demonstrating that resilience and that willingness to adapt.
You give us some specific examples of that adaptability in action.
Sure. I mean, their commitment to expanding their distribution network, especially in those rural areas where, we're seeing that stronger growth, is a really smart move.
Right.
They're also not afraid to embrace, innovation, both in terms of new product development and that digital transformation of their operations. These are strategies that are helping them stay ahead of the curve and meet those evolving consumer demands.
And we can't forget their push into those adjacent businesses,
Yeah.
diversifying their portfolio to capture a wider slice of the consumer market.
Absolutely. Expanding into categories like cakes, rusk, wafers, even cheese and drinks, it provides them with, new revenue streams and reduces their reliance on any single product category.
Right.
It's a strategy that that a lot of FMCG companies are exploring as they navigate this increasingly competitive landscape.
Yeah, I know you have a whole stack of listener questions here. You ready to tackle some of those?
Yeah, let's dive in. I'm always eager to see what's piqued people's curiosity.
Okay, so first up, someone wants to know more about Britannia's international expansion efforts. Which markets are they targeting, and how are those operations actually performing?
That's a great question. Britannia has a growing presence in several international markets, including Nepal, the Middle East, Africa, and even parts of the Americas. And their presentation highlights the continued, strong performance of their international business, driven by healthy growth in key regions like Nepal, the Middle East, and Africa.
So they're not just a domestic giant. They're making waves on the global stage as well.
Yeah, for sure.
Now, this next question digs a little bit deeper into their strategic initiatives. One listener is particularly interested in their digital transformation journey. They want to know how Britannia is, using technology to enhance its operations, from supply chain management to marketing and sales.
That's a topic I'm particularly passionate about. Britannia is clearly embracing the power of technology. They've implemented a range of digital initiatives, including, an integrated transport management system, robotics for process automation, and even a supplier collaboration platform.
Wow, that's quite a digital arsenal. Can you share any specific examples of how these technologies are making a real difference?
Sure, like their AI-enabled merchandising platform is helping them optimize product placement and promotions in stores, which leads to, increased sales and reduced waste.
Okay.
They're also leveraging first-party data for direct marketing, which allows them to, personalize their messaging and target consumers more effectively. Ultimately, it drives stronger brand engagement.
So it sounds like they're really at the forefront of digital transformation in the FMCG space. Now, this next question reflects a growing concern among investors. How is Britannia addressing ESG considerations? And what steps are they taking to ensure their operations are, sustainable and ethical?
Yeah, this is a critical question, and it's encouraging to see Britannia, taking a proactive approach here. They've outlined a comprehensive sustainability strategy that encompasses, environmental stewardship, social responsibility, and those strong corporate governance principles.
Can you give us some tangible examples of their ESG initiatives?
No, absolutely. On the environmental front, they're actively reducing their carbon footprint, implementing energy-efficient technologies, and minimizing waste throughout, their entire operations. They're also committed to responsible sourcing practices, ensuring ethical treatment of workers, and supporting sustainable agriculture.
That's fantastic.
Yeah.
What about social responsibility? Are they taking any steps to give back to the community and create a positive impact beyond just, their business operations?
Yeah, for sure. They're actively engaged in various community development programs focusing on areas like education, health, and sanitation.
Hmm.
They also prioritize employee well-being, fostering a diverse and inclusive workplace, and providing opportunities for, professional growth.
It's really inspiring to see a company like Britannia taking such a holistic approach to ESG, recognizing that sustainable practices aren't just good for the planet and society, but also essential for long-term business success. All right.
Yeah.
One final question before we wrap up.
Yeah.
What are your predictions for Britannia's future, and what challenges and opportunities do you see on the horizon?
Well, predicting the future is always a bit of a gamble, especially in a dynamic market like India.
Right.
But based on their current trajectory, their strategic initiatives, and their proven ability to navigate those challenges, I'm cautiously optimistic about their prospects.
Okay. What factors contribute to that optimism?
Well, their strong brand portfolio, that robust distribution network, and their commitment to innovation all position them well to benefit from, the continued growth of the Indian consumer market.
Yeah.
Their focus on adjacent businesses and their embrace of digital transformation provide additional avenues for growth and efficiency.
Sounds promising. But you did say cautiously optimistic. What potential challenges are you kind of keeping an eye on?
Well, the inflationary environment remains a concern, like we've discussed. Those rising commodity prices could continue to squeeze their margins, which would require, careful cost management and maybe some strategic pricing adjustments.
Yeah.
Competition in the FMCG space is also intensifying, both from domestic and international players.
Right.
It's a constant race to stay ahead of the curve.
So Britannia needs to keep innovating, stay efficient, and just, adapt to the ever-changing market dynamics.
Exactly. And we can't forget about that evolving regulatory landscape, which can impact everything from, food safety standards to labeling requirements.
Right.
Navigating those changes effectively will be crucial for maintaining, compliance and consumer trust.
Definitely a lot to keep an eye on. Any final words of wisdom for our listeners as they follow Britannia's journey?
Stay curious, keep exploring the factors that are shaping the Indian FMCG sector. Pay attention to those evolving consumer behaviors, the competitive landscape, and how Britannia's strategic decisions translate into, actual financial performance. It's a fascinating sector with tremendous growth potential, and Britannia is undoubtedly a company to watch.
Excellent advice. Thank you so much for joining us on this deep dive into Britannia Industries. We've really explored their financials, their strategic initiatives, and those broader market forces shaping their business. I hope you found this deep dive insightful and engaging. Until next time, happy learning.